Quick heads up before we dive in. I'll be on vacation in Ireland from 14 to 26 of August. So the daily SGX Market Digest will take a short break. I'll still try to post the regular videos when I can, so keep your notifications on. Hey there, Singaporean investors. Tired of sifting through endless news trying to figure out what truly matters for your SGX portfolio? Or maybe you're wondering how today's market moves impact your investments. Welcome to the Investing Iguana's daily SGX Market Digest for Wednesday, August 13th, 2025. I'm Iggy, and in the next few minutes, I'm cutting through the noise to bring you the critical updates, hidden insights, and Iggy's unique take on exactly what happened on the SGX today and what it means for your money. No jargon, just clear, actionable intelligence you won't find anywhere else. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed 1 million reads and 58,000 likes. I produced over 1,000 videos with more than 600,000 watch hours as of August 2025. I also track regional and global trends to give you the broader context. Let's dive into the most important SGX moves today. Brief market summary. The day showed mixed sector signals with earnings-led moves, CapEx plans in India, and some dividend support. Investors stayed selective ahead of global data later this week. Singtel, Z74. Q1 net profit jumped 317% to 2.9 B, but most of that came from one-offs of about 2.2 from the Airtel stake sale and the InTouch Gulf Energy merger. Shares closed Tuesday at 392, down 0.3%. The takeaway: headline numbers look huge, but core operations matter more for steady cash flow and dividends. Are you holding for yield or growth? That choice shapes how you read this print. Wilmar International, F34, H1 net profit rose 2.6% to use 500 marbos, driven by stronger plantation and sugar milling on higher palm oil prices and better fresh fruit bunch output. Shares closed flat at 297 before the release. This is real operating strength. Wilmar's mix across upstream, midstream, and consumer helps buffer commodity swings. If you want agri exposure without a single price bet, this stays on the watch list. Capital and investment, 9CI. CLI plans over 2.8 B of investments in Maharashtra by 2030 and launched its first India data center in Navi Mumbai. It aims to grow India funds under management from ZAPES to about 15 Bs by 2028. Shares dipped 0.7% to $2.75. India is a scale market but needs local know-how. CLI's track record helps. If you want India-linked growth via SGX, this is a cleaner route than picking single-city developers. City developments looted, C09. H1 net profit up 3.9% to 91.2 mos. EPS at 0.097 versus 0.092. Board proposed a final dividend of $0.03, up from $0.02. Property development stayed the largest revenue driver with a 24.3% jump. Shares were flat at 635. CDL keeps it steady in a choppy property cycle. Slight dividend lift signals confidence without overreaching. If you want stability with optionality, CDL fits. Yangzijiang Financial, YF8. H1 net profit rose 28% to 137.7 mils on credit loss reversals, better maritime JV contributions, and FX gains. It plans to spin off YZJ Maritime Development, raising up to 250 mullahs from accredited and institutional investors. Shares rose 1.5% to 0.99s. Spin-offs can unlock value and sharpen focus. Watch how proceeds and governance shape returns post-listing. Hong Leong Asia, H22, H1 net profit up 13.1% to 56 dollars, led by UK strength and higher precast concrete volumes. Shares gained 1.1% to $1.86. This is a diversified cyclical play linked to trucks, engines, and construction demand. If China and regional infrastructure reaccelerate, earnings torque could surprise. Today's theme: look under the hood. One-off gains can cloud the true trend, while steady operators keep compounding. We saw telecoms with big exceptional items, commodities showing disciplined operating gains, property leaning on development and modest dividend growth, industrials benefiting from maritime and construction recovery. Most crucial takeaway: Separate sustainable operating cash flows from accounting boosts. That's how you judge durability. Keep your portfolio balanced across sectors with different drivers. Pair yield names with growth at a reasonable price. Add cyclicals with catalysts, but size positions right. 3 quick strategy notes. Focus on cash generation and payout visibility, not just EPS spikes. Use diversified platforms like Wilmar, CLI, to gain exposure to volatile themes with less single risk. For spin-offs, watch use of capital, structure, and incentives before chasing the headline. That's the scoop for the SGX today, Wednesday, August 13th, 2025. Reminder, I'll be in Ireland from 14 to 26 August, so the daily digest will pause for a bit. I'll still try to update the regular videos when possible. Stay tuned. If this helped you and you want my real-time takes and early heads-ups, join our premium membership. It's just $3 a month, about a cup of coffee, for daily foresight straight from my desk. Like, share, and drop your thoughts below. I read every comment.